Well, hi, everyone, and welcome to the Buffett and Beyond Research Saturday ETF report. This is August 24th, 2024. And folks, remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Don't forget that if you want a full free month subscription to any of these videos that we have, we put out 3 a week, 3 different videos on a Saturday. You get the 3 videos, and on Tuesday, Wednesday, Thursday, and Friday, you get a letter on the market and timing the portfolios. All we need is your name and email. We want you to get a free month subscription so you can see what we're all about. All you have to do is go to buffettandbeyond.com. Buffett is spelled with 2 F's and 2 T's, buffettandbeyond.com, and give us your name, your email, and you'll start getting a full month free subscription to our letters. And this week, well, let's look at the QQQs because we're having a little trouble here. We broke through nicely that 50-day moving average, which is also bringing the 20-day moving average up. And then Thursday, it stalled out as interest rates went higher, the market went lower. And today, Fed Chief Powell spoke, and he said they're going to start lowering interest rates pretty soon. They made no bones about it. But you know what? The market expected it. So here we are rising off of that 50-day moving average, and that's the line in the sand right now. Up here, we got a little sell signal. We talked about it in yesterday's market letter. This is a sell signal. Now the market is trying to go back up down here. It's trying to go back up to this point up here. And if it doesn't, this line will not raise above this line, and we're going to have a little trouble in here. The key is, will it turn down this intermediate term indicator? You notice that the volume is getting lighter. These green vertical lines, the volume is going down, which is not a good sign for the market. It's just starting to get weary in here. Next week, or this coming week, is the end of the month, and usually the end of the month sees a low point, and then it sees the market rallying into the weekend, because Tuesday and Wednesday, money will be coming into the markets because of IRAs and 401ks and all the pension plans. And it's a 3-day holiday. That's why I didn't mention Monday, because Saturday, Sunday, and then Monday, Labor Day, right? And we're going to have a 3-day holiday. So the end of the month and a 3-day holiday going into the weekend usually portends for an upward moving market. It's the next couple of days that we have to worry about, like Monday and Tuesday of this coming week, that we may see a low in here. But we just have to wait and see. Right now, it looks pretty good. We're having a nice rally today on Powell's speaking very dovishly on the market. Now, when we're not sure where we go, this is the SQQ. So this is the opposite of the QQQs. So these are the QQQs, which is the NASDAQ 100. And when the QQQs go down, let's look at this part in here. When the QQQs go down, the SQQQs go up. They are the inverse 3 times as much. So you could take 10% of your portfolio if you think the market's going to go down, which back to the QQQs, yeah, we got signals in here. We got a crossover down here. The market was definitely going to go up. We got the buy signal in here. And so we got out of our SQQQs, because when the QQQs go down, the SQQQs go up. Or when the QQQs got a buy signal, the SQQs started going down. So what I'm saying is that the SQQs are the inverse, and we are looking at the market. We're trying to get an indication of the market, if it's going to go up or not. Right now, the SQQQs are signaling that it still wants to go down. We have a downward signal here. We have a signal here that it started to go up because the market went down on Thursday. So this is Thursday. The market went down. This SQQ went up. So we look at this and it says, okay, we're still in bearish territory for this, but we're in bullish territory for the QQQs. We'll have to see what Monday and Tuesday do. Okay, let's go to the Dow Jones Industrial Average, and we see a nice rally taking place. As I'm recording this on Friday afternoon, market's up 425 points right up in here, and we're trying to break through this triple top up here. If it doesn't break through, then we do have a triple top, and then we'll probably go down to that 20-day moving average once again. We'll have to see how the market closes today as I'm recording this, which is Friday, and then we'll see what Monday and Tuesday bring us. I like to look at the housing because housing is, well, as interest rates go down, housing starts picking up. People refinance, people start buying their first-time homes, and we can see we're having a nice rally in here. This indicator up here is just saying nice, and we're having a great day today. And again, this is Friday, and our long-term indicator, or our intermediate-term indicator, finally turned up, which is a good sign. And when we look at the transportations, folks, if the transportations tell us whether goods are moving or the raw products are moving to the manufacturers, and if the manufacturers are delivering to the retailers who sell to us. So we have to watch the transportation, and so far the transportation is doing pretty decent here. We haven't reached previous highs, and if we go all the way back here, hasn't reached this high either. So we're lower than we were several months ago, but at least we're heading in the right direction, and down here we do have this buy signal in place for the intermediate term. Now, let's look at the XLK. The XLK is a technology sector, and I'm bringing this out for a very, very important point because we have an XLK portfolio made up of the stocks that are in the XLK. It's made up of 6 stocks. So we pick 6 of the best stocks, and we're going to see how they're doing comparing to our other portfolios. So here we are with the 6 stocks in the XLK, and they are up, well, the XLK is up 15.8% for the year, S&P up 17.8% for the year, and our top 6 stocks up 24% for the year. So the top 6 stocks are doing very, very well, and you can't cry about that. But it is more volatile than the S&P 500. And so, therefore, if you're talking about risk reward, we want a better reward, a bigger reward than the S&P. We want a bigger reward if we're going to be more volatile. Now, when we look at the QQQs, we're seeing that, whoa, we are up 34.5%. So the QQQs, NASDAQ 100, we picked the top 11 stocks out of there. The number doesn't matter. It was 12 at the beginning of the year. Now it's 11. We took Tesla out and we sold it, and we had a 2% loss on that, which stays with us all year long. And the other stocks are up 34.5%. If you hedged, you can add another 7.7% as of Friday afternoon when I'm recording this. So but the stocks are the thing that I want to bring the point out on. They're up 34.5%, but the XLK was up 24%. So back to the QQQs, which has most of the stocks in our XLK portfolio. So here you are more diversified, getting a higher return, and you can easily hedge it using that SQQQ. That's why I talk about the SQQ all the time, because it's a hedge for us for our QQQ top 11, top 12 stock portfolio, whatever it is, each year. And remember, we buy pretty much at the beginning of the year or at the end of the previous year, the very end, usually between Christmas and New Year's, because it's a slow market, and the market, everybody's in holiday mood, so it's easy to trade and get out of your older stocks and into your newest stocks if we're going to make any adjustments, and we do rebalance at that time. Now, you may do it in the beginning of the new year, because it all depends on your tax situation. As long as you hold your winners for longer than a year, then you get better capital gains relative to taxes. All right, now let's go to our sector stars. The sector stars have about 17 stocks in them. They are up 29% if you're hedging it, 34% because we're making money on our hedges so far this year. Very, very nice. We're up very, very nice from last week also, and up 29%. with the market up 17%. So we're just about doubling the market. And let's look at our totals. Our top portfolio, so this is as Friday, midday. Our top portfolio so far, the 11 stocks in the QQQs, up 34.5%. Sector stars, about 17 stocks, 18 stocks, up 29%. Our 30 growth stocks up 22.6%. If you're hedging any of those, you could add somewhere up to as much as 7.7% because we're actually making money on our hedges. And these are timed hedges. That's why we're able to make money on it. And so far, we've been pretty good this year. S&P up 17.8%, trailing our three major portfolios. So, folks, we had a rough week this week, up, down. Fed Chief Powell said nice things about the market. We like that. The market likes that. So clear your heads, go for a walk on the beach. If you're lucky enough to be near one, walk around the lake, walk on the golf course, sit and watch television. Get your mind off the market. Have Sunday dinner with your family. Be with your loved ones. Stay safe. And, folks, we'll see you back here on Tuesday.